What happens is that if you take my kind of plans for retirement, the insurance company is willing to pay you $1 million upfront if you're sick and not able to work. Now, how to reduce, some steps that I can share with you, how to reduce cash flow. Steps to reduce cash flow. Mr. Goh says trim 50% of your staff. Oh, they're very aggressive. Mr. Goh also said top up the loan. Of course, don't do along, just top up your loan, okay? Don't do along. So some of the ways to reduce your cash flow is to renegotiate your rentals. One of the ways you must do is to renegotiate your rental. Don't go and tell yourself, this landlord cannot this idiot cannot. He will always force me to pay the higher rent. No. What you have not tried, you do not know. Please go and try. Why leave it to chance, right? Do not leave it to chance. If you can reduce cash rental by 12%, it's better than nothing, right now. 12%, 20%, 20%, 30%, 20%. Renegotiate your rentals. If you're buying the property and paying installment, go back to the bank and renegotiate the rate. You must go back and renegotiate. Alright? Number 2 is refinancing your term loans to longer terms. Let's say your terms is up, say 5 years is due, and you're paying say X amount of money. Negotiate the banks, can I prolong this to say 8 years now? And I pay you slightly higher interest, but I pay you longer. Can we do that? So if the banks allows you, it reduces your cash flow out, right? It reduces your outflow of your cash. Number 2, overdrafts turns to term loan. Overdrafts is always expensive. Turns to term loan. Negotiate. Ask the banks to do it. Any of your credit card debts which charges you 18%, convert them to term loans. Do not take the brunt of the 80% credit card. It's not worth it. The other thing is the payments to suppliers. A lot of you are squeezed by suppliers right now because suppliers say, hey, I don't know. So what you can do, number 1, is ask for extension. I've always told some of my suppliers friends, if your client dies, no good news to you because you cannot collect back. If your client cannot survive this crisis, also no good to you. There's no future businesses. So sometimes, although business is not mine, but as a friend, I can tell them, if you can see a future of this client, then be a little bit more flexible. So ask for extension. If your supplier can see a future with you, they will help you. Number 2 is early settlement. Ask for a discount. If you are going to pay, if you are going to pay your due in 60 days and you have cash, one way to reduce cash flow is to pay early so that you don't have to pay so much. Ask for a discount. Tell them, Mr. Goh, I owe you this in 60 days. Can I pay up right now and get a 5% discount? Why not? Ask, you might get something back right now. So that is some of the ways that you can do it. Now, early settlement, ask for 10%, Mr. Goh, correct? You are right, you should do that, Mr. Goh. I know some of your suppliers, But I'm asking you, early settlements if you can, ask for a discount. Now, a lot of business owners do business. They do actually put in some money as retirement fund. Most of the businesses does that. We actually put some money elsewhere into assets, into shops, into whatever, right? But at this moment, a lot of businesses found that whatever they are putting in as retirement fund or as retirement assets are not very reliable. Especially assets during a crisis is not very reliable. I've got clients who have 18 properties and still lack of cash. Why? Cannot sell. I've got clients who have 5-6 cars and cannot sell the cars. The cars depreciate like crazy right now. So how? You cannot. So what I'm trying to share with you today is there's a choice to retire or save your business. This is something very real. I just want to share a real scenario with you. Say you are a 35-year-old guy. You are 35-year-old and you have a vision for yourself to retire at 55. So what you do is you have a business and the business funds your retirement, right? So the business funds, say the business funds 3,000 every month for your retirement. So that the 55-year-old guy can retire, right? So you save this money for 20 years, right? But suddenly a crisis happened or the person becomes sick and he cannot work. What happened to the money? What happened to the money? What happened to you? I can tell you what will happen to you. The banks, if they know you're very sick, will they keep the cash coming or not? Will they start to shut off the tap? Will they ask for you to, come on, give me back my money. I want to cancel the loan. Will they do that? They will. Because banks are famous to take back the umbrella when it's raining. You're sick, it's raining. They're taking back whatever facilities they're giving you. Overdraft cancel, facilities cancel. Your suppliers is the same. I have a client recently who was very sick. You know what the supplier did? After knowing he had cancer, the supplier asked to be paid in cash on delivery. The son, sorry, your father is sick. I don't know whether you can survive or not. Please pay me in cash. No cash term, no terms, no deal. It's cash. So cash becomes a problem. So what you can do is that either you have two choices. You can actually use whatever you save for the supply for the retirement fund, or use the money to save your business. These are the two choices. And that if you save. And a lot of businessmen do not save. Why? A lot of businessmen thinks that EPF, whatever they are giving, it is enough. Come on now. We know it's a lie right now. You and me know it don't work. Man. Some doctors earning 100,000 a month, earning 200,000 a month, told me they pay EPF 6,000, 7,000 annually. Annually, can retire. So where do you use the money? Buy house or buy property, buy this, buy that, buy land, buy. Then when crisis happen, how? Sell. Cannot sell. You do not have instant cash. So what do? You lay long the property, it becomes a problem. EPF is never enough, Mr. Goh. EPF is never enough. EPF can help you in some ways. That's why the government force you to do EPF. You have to do something else. So the retirement basic is that you must save the money. And when you're sick and not well, the banks keep it, all your assets and keep back all your umbrella. And at the end of the day, you have two choices. Either you use a retirement fund to fund the business and keep it going, or you use a retirement fund to fund yourself during retirement. The business dies. That is a bad kind of choices. But if there's a better choice that you can take 1 million if you're sick and still enjoy a rich retirement life, will you do that or not? Will you take that choice? If I can show you a better choice. So it's the same thing at 35 years old, you want to plan for the guy who is 55. So this guy that you have prepared, say a 3,000 ringgit retirement plan for his retirement at 55. You save for 20 years. In between, something happened. This person become sick. He cannot work anymore. It's gone. Kuku, cacat, on chemo. Tak boleh buat anything already. Right, what do? The banks will come after you. Take back all the umbrella, take back all your terms, take back take. Supplier cash term, no cash, no supplies. What happens is that if you take my kind of plans for retirement, the insurance company is willing to pay you $1 million upfront if you're sick and not able to work. Fair and square, 1 million upfront. So when you have that 1 million cash up front and you're still kicking, not dead yet, just have to go through chemo only, what can you tell your banks? You want to take back my finance? Go ahead. I've got $1 million cash. I'll go to the guy next door. F you. The suppliers, you want to take cash? I will say F you, same thing. I will go to your competitor. I've got $1 million cash. What will your supplier say? Your supplier say, hey, don't say that lah, kidding only, just joking. I tell you, 人係好現實嘅. People are very realistic. So you must have cash in hand. So one of the way is to prepare this. So what happens is that when we pays you that $1 million, it is for you to finance your business and finance yourself. The retirement fund, we are going to still pay you back at 55 years old. So this is how the plans works. The retirement savings is 3,000 every month. You save for 10 years and that's it. Don't save anymore. After 20 years, you get back double of whatever you have saved, plus minus about 800,000. An interest rate so about 4.5%, 5%. If any agents tell you the interest rate is 15%, you tell the agent go back and take back the license. Why? He's lying. Cannot be one. Insurance company cannot do 15% return one. Okay. We will provide you life insurance 1 million, critical illness 1 million, and also an accidental policy for 2 million. Alright? If you're sick, you cannot work, the company pays you 1 million, and your retirement fund is still intact. You will still take back 800,000 to a million, 2 million, whatever. 3 million that you should be getting. So